Good evening. This is the Elliott Wave Daily Update for the S&P 500 for Monday, January the 6th, 2024. I am going to start here on the ES, on the futures market, and I am going to start also on the daily chart. And I'm kind of taking a review of what's unfolded since I placed the intermediate wave 3 at the high. I believe it was from December the 6th. And yep, December the 6th. And then from there, I have been counting an intermediate fourth wave down before we put in a finishing fifth wave, intermediate fifth wave rally up again to new all-time highs. Now, we had a great start to it, where I believe that the market came down in five waves, one up in three, came back down in five. And this is where it starts to get a little sticky because you're looking at this and it really can count to, after today, is counting really more as a five rather than a three. Now, what are the possibilities of what's going on here? Is one of our subscribers did come in and mentioned, and it is an alternate, so I'm going to present it tonight, but it was an alternate that I've kept in my mind, and that would be that we have a larger, again, that larger minor wave A still coming down and still in progress. And what that would then entail was that we have a 1-2, 1-2 in the market. Now, let me open that up a little bit. So don't forget, because what we're really looking for is for the market to eventually come down to that low of minor wave 4, as Elliott has continued to tell us. And it is one of the areas that I continue to hold on to as a strong indicator when we're within a fourth wave. That fourth wave usually will find its terminus, its endpoint, within the price territory, and normally again at the terminus of the fourth wave of one lesser degree. I am counting an intermediate degree, which is in the yellow, and the one lesser degree would be the minor. That minor wave 4 low was on August the 5th of 2024. And that low came in at 52, let me see, 51, 52.51. And so I would be expecting this intermediate fourth wave to find its way down to that level. And right now we're still flirting and trading between a tighter range, but above 6,000. Now, what could this all be? If I'm looking for that to come down, then 1-2, 1-2 makes total sense. But here's the thing. If this wave up is a wave 2, it cannot go above this high, which was 6,095. Let me just double check and make sure. No, actually, the high is 6,107. It cannot go above that because then it's not a wave 2. If this is 1, it's not a 2. In fact, it'd be 1, 2, 1 of 3, 2 of 3, and our next move should be a nice, strong down leg. And if that's the case, then yes, it could be a 1-2, 1-2, a nesting 1-2, 1-2, as they call it, and then it would drop pretty precipitously as this third wave unfolds. Now, what would be a third wave of that minor wave A? Now, again, we can come tumbling down to a 4 and a 5 and call it an A here, still get that rally in a B, and still come down in the C wave and end up here. So we're working against several factors. That there are counts that also could suggest that we might still be within an intermediate third wave going up, and that this minute 3 of minor 5 would be put over here. And that this, we can turn it around and make it into an ABC. I know, strange, a lot of people have problems with that, but if it's an ABC and that this is minute wave 4, and then what we have is 1, 2, right? Minute wave 1 of minor, actually, if this would be minute 4, we're in minute 5. So these would be minuet 1 of minute 5, minuet 2, minute 5. And I know I'm counting it as a 5, but it also can, this is where, again, it gets tricky. And a three is a five, and a five is a three, and et cetera, et cetera. But I am attempting to put it together as the entire pattern. But if I can single it out, you'll be able to count each. They weren't extremely defined. As we see sometimes there are declines, you go inside of that and you will definitely find it. I'm just going to start to break this down. Let's bring it into the 4-hour chart. And again, open it up so now we can look inside. And again, here we can have it A, B, C. So it can be a difficult move, not as clean, or it can be 1, 2, 3, 4, 5, A, B, C, B, and then 5 waves down C, and that this could be an ABC down. So in other words, it actually could be 1, 2, and then we're going to go off. Or it's if we're looking at the downside move, and then this could be 1, 2, 1, or 1, 2, 1 of 3, 2 of 3, and off we go. So there's both sides, and it's all the same pattern. In other words, we're looking at the same market, and we're just viewing it in two different lenses. If I had, that's why I produce a preferred and an alternate count. So the preferred count remains that I have a feeling that we have finished that intermediate wave 3, and we're working our way down in an intermediate fourth wave. And in that case, we have also two possibilities, right? 1, 2, 1, 2, and that would put us still within the minor A. And it does become more applicable because the fact that the minor A kind of comes in at a slight failure, not a big failure, but still a failure, that the C wave of A did not take out this low. But if we're going to count it as 5 and we're doing 1, 2, 1, 2, then we're looking for a 5-wave structure down to form minor A. It is actually a little bit cleaner to do it that way. So again, I'm going to say thank you, Brent, for bringing that in and for sticking with it and working it. And now I'm including it because it was an alternate and remains an alternate for me, but one that can be very useful. We now have to let the market tell us. Today's rally was pretty strong. Today's rally was very strong, which also keeps the other alternate where I have minute wave 3 up here, minute wave 4 down here, and we have 1. I know it's a 3, but that's where it starts to get very cagey. But it could be 1, 2, 3, 4, 5. Right? That 4 does not overlap that 1. So it could be, and 5 is the shortest, not 3. So it could be 1, 2, 1 of 3, 2 of 3, and off we go. What's the implication of that? The implication of that would suggest that we are start heading towards 6,200. Definitively, if it is, we're in that minute wave 5 of of intermediate wave 3, or minute wave 5 of minor wave 5 of intermediate wave 3 would be exact. Then it could be 4, 1, 2, 1, 2, 3, and we're off to the races. And ultimately, we end up towards 6,200, which, by the way, I will add to that particular alternate that currently the call wall in the SPX sits at 6,200. In the ES, with the current volatility, with the current premium in the futures market, is 6,247. So here we are. We'd be at all new all-time highs. So if we get up there, it's not necessarily, a new bull run. No, it's just a completing. And that I was a little early in putting this third. And that's also not uncommon for a lot of Elliott analysts. So again, I try to present several applicable or things that you can apply. Now, the other question that I get is like, people want to know or give me trade ideas. Well, let me make it clear. I'm a day trader. When I am trading, I'm not necessarily taking. I do attempt to take an Elliott view for sure. but I'm not taking a bullish or a bearish posture towards the market. What I do use, and again, it's just because of my background has always been in my career, was a market maker, an options market maker. So when I'm discussing options and I'm discussing options flow and gamma flow and capital flows, and volatility, when you combine that, you're getting levels that continue to be met. Now, those levels don't necessarily coincide with somebody else's bullish or bearish posture towards the market. So again, I think that what I try to present is a usable preferred and alternate. Ultimately, it's the market that's going to tell us what is going on and what direction things are going to go. But that gets intertwined with ETFs and the indexes and the ETFs, the spiders, the Qs, the futures market, the cash market, all of the individual ETFs, et cetera, that have options to trade that show this capital flow and the gamma flow all combining. And when these levels get broken, i.e., a volatility trigger, a put wall, a call wall, different gamma levels. If they get large enough, then you get what we call a gamma 1 or gamma 2 or gamma 3 and 4. Those are the measurements. Now, this is all coming from spot gamma, which, by the way, is exquisite, excellent, excellent information. But you have to understand, and then you also have to understand what it implies to the market when these levels get broken in either direction. And that is what I'm going to try to start intertwining into the analysis. Now, again, today we're supposed to also start our memberships. Well, because it comes down to it, nothing ever goes as planned. And we attempted to publish members only, and it didn't pull up with how does one get in. So I've had to go back to YouTube and kind of put my requests out there to see if what can happen. But it is still the plan. Now, I will add one more thing at the end. So let's get back to the ES. First, my preferred remains that we are within this minor or an intermediate degree fourth wave down. Now I'm going to bring it back out, see if I can we take a look just on that 4-hour chart. One way I can kind of say the possibility that we're done with the minor A wave, and this is a minor B wave, and that's going to be an A, a B, and a C. If that's the case, I believe that this really does kind of look like 5 waves up, 5-wave A. That's going to suggest that this B is going to be a zigzag. Now, that then takes us over to where we have these markers, which are the fib levels for a minor B wave. But we also know if we have the ABC down 3, then we have the possibility that the B wave can be irregular. Well, look what still comes all the way out, 1.382. Irregular B can take us back to 6,200, which happens to be where the call wall sits in the SPX, not necessarily the ES, but in the SPX. So we start to see how things congeal and still are workable within the current framework of what I'm talking about in terms of an Elliott move. But when you start hearing that, well, I think the market can go to 6,200, it's like, I don't disagree. I do. I think it can. But the market will show us. So, but I'm going to show you how. Now, does that mean that's what is going to happen? No, no. The market does what the market wants to do. And quite often it is due to sudden moves and changes within the capital flow. You know, today, for example, NVIDIA, boom, had to have it. Boom, Apple had to have it. Tesla had to have it initially. And then Tesla decided, nope, we don't need it. And then from being up substantially, going down, not super substantially, but going down, dropping all the points back out. The fact that Apple had a very, great morning run, everybody had to jump back in. So when you see these things are happening, Some of it continued to flow, like NVIDIA stayed up. NVIDIA got up closer to 152, may even gotten above. I can take a very quick look at that and just see NVIDIA. How high did you get today? 152.15. So that is, I believe, a new all-time high. Nope, 152.89. So, but starting to get close. Finishes the day back down below 150. Offered back out, right, in the after hours. So it's still trading. Offered at 150. So we'll see again the interest. First full day of a new year. Yep, we had the second and the third, but it kind of was stuck in the holiday week because the holiday was in the middle of the week. So, first day that everyone's back on board and we see what's going to happen. So, again, is it an A, a B, and a C, and we still might get up there? Right? Or at least a flat. What's the flat going to look like? Well, the flat's going to look like we get back up towards this level. And that is 6,185. So we got a lot going on. What can all happen? So we have preferred, which basically could be, I'm running them together. 1, 2, 1, 2. We're going to drop. And in that case, you're going to have to work this out as to be an ABC up versus a 5. And it is possible. Going to have to break it down off the 4. Going to have to take it down to the 15. But you can work it. A lot of people say, well, I stuck to the hourly. It's like, yes, so did R and Elliott. Stuck to the hourly chart, and then it still looks like 5 up. How are you going to make it a 3? Questionable. And bring it down again to the 15. There, it starts to look a little bit different. But it still probably better counts as a 5. Now, is Elliott an exact science? No. But it certainly does give us a lot of information on market movement based on the human psychological factors involved in trading, involved in a market. So let me go back. Preferred, ABC, A, or still under the preferred count. 1, 2, 1, 2, we drop, seriously drop. This ABC, A, slight failure. I know Elliott basically was talking about that wasn't something that he would look for. It isn't something that I look for. But if I see it and do I allow it? As I answered another really great analyst who follows and we discuss things, Daniel came in and was talking about, well, I don't know if Elliott would have really gone and allowed that. It's like, well, R.N. Elliott lived and died in 1946. So, yeah, they didn't actually have what we have today. They didn't have the power of an algorithm. They didn't have this quantitative trading totally framework around a market. And that's what's trading versus humans making that decision. Humans compute, humans write the algorithms, but it is the algorithm that does the decision making because that's when all the factors meet, boom, trade. So again, it throws things just a little bit differently. And that's why I said, well, probably I can allow for it because it seems to be as clean as I think we can get it. But then again, I'm going to offer out 1, 2, 1, 2, or we have this whole scenario of really just going to start to drop. From here, 1, 2, 1, excuse me, going back. 1, 2, 1, 2. Now that would keep us in a 5-wave A, 5 waves from minor A. So all of these would be minute. 1, 2, and then it breaks to minuet. 1, 2 of that minute third. And so the next move would be really hard down. So right now we're continuing, we're going to go up a little bit. So again, we're just trying to factor it in. The market's going to let us know, but we got to look at it in several different frames. Now, what else? So that is the preferred. And the preferred's coming in two versions. Either we're going to have an ABC and it's going to be more of a flat intermediate wave 4, or as somebody else, and I really appreciate all the comment, was saying that the possibility, well, it's an ABC, it's more of a triangle pattern forming. I'm like, could. That would certainly take up time. And possibly, if this is going to be A, we got an A, we got a B, we get a C. Okay. And a D and an E and then a boom for a C wave. All possible. The deal with corrective patterns is you have a choice of between 11 and 13 different structures, different patterns that can be played out. That's why they seem so wishy-washy. That's why it's like, well, make up your mind. That's why it will make us a trade recommendation or just a trade idea. It's like, well, each one carries its own trade idea. So you want me to say, okay, well, I think we should be really look to go short. And then you do, and the market goes up 100. So, you got to take it day by day, and you got to take your clues from the market itself. All right. So, to just recap, because I don't want to spend the rest of the evening here, I still think from my preferred count that this is intermediate wave 3, and we're working on the intermediate fourth wave. We have two counts still within that preferred count that would suggest 1, 2, 1, 2, and we're going to come down. And that would be then still inside of the minor wave A, going back out to a 4-hour chart. You're going to see we got to end up down here. Minor C should end up down here. Minor C of intermediate wave 4 should end up down here. Look where we are. So if we're still within that minor wave A, a minor wave A gets us down into here or down into here. All right, here we had the 5, then we got a 3, then we came back down. Here we had the 5, then we had a 3, and we're coming back down. So patterns, are they going to repeat? Often they do. And then we come down and we get that minor A, and then we have this B, and then we have a dramatic C wave. Could happen again. But it's going to be larger because it's intermediate versus minor. But it all fits when we look at it. How do we want to really play it out? 4-hour tells us the same story. So what if that's the preferred, and within that preferred we have two choices that I see, two possibilities. Well, what is the alternate? The alternate would be that this is the 3 and this is the 4, and it's 1, 2, 1, 2, 3 on its way up to 6,200. Those are our choices. Which one can we really go with? Well, each of us as individuals are going to play to what they think has the stronger position. After a day like today, everybody's like, well, it's risk on, risk on. And you can use that as a factor. And again, with the S&P, with the SPX finishing the day above, I got to go over this way, it's much quicker. SPX, 59.75. So, yeah, we needed above 6,000. It did get above 6,000, didn't hold. So we can consider that an attempt a failure. So is it risk on? At that moment it was. Above 6,000 kind of shifts it back over to risk on. What are they doing in risk on? They're selling the VIX and they're buying the underlying, the component volatility. And that comes in within premium in the calls. So you see the trades. That's what the trades are telling you. So again, depends on what you want to do. Are you more of a dealer? So you're going to be selling them the calls and you're going to be buying the underlying? Or are you more the trader? All right, which is just you're buying the calls and you're selling the underlying. Kind of a different story, but still function. Or you're just buying the calls because your opinion is that it goes up. So those are the three things, actually. And put that into the pot that says corrective structures can be one of 13 different choices. and combinations thereof. And you've heard that we label ABC, X, ABC, X, ABC, and then some uses WXYZ, X, WX, WY, X, it goes on and on. So we have WXYZs and we have ABCs. Basically the same. Some put it in a little bit cleaner and some are easy to understand. I'm very old school, so of course I tend to stick with my ABC, X, ABC. That would be a double, but we have triples. They are becoming a little bit more common. Okay, so I am going to end it there. What do we think for tomorrow? Well, we're going to have to wait and see if the market can hold on to this overnight and they get everybody else to come running back in again and push it. A very quick B wave. So let me just open this, kick me back down the hour and be a little quick about this one now. So I'm going to take this off. This is upside, a B wave. But if we're looking for that maybe minute A of minor B is done, well, then we've got a minute B wave. We got 3A2 at 59.94. We have 50% at 59.71. We have 62% at 59.50. Those are all very legit support levels. And I would expect to find support at each one. More here and here, 59.75 to 59.70, 59.50 down to 59.40. Works like a charm. And then that would be B, and then we run back up into C, and the C is going to be 5 waves. And what's that look like? Well, probably back to 61. That's a B wave. We also had these out there, which are also for the minor B wave. So B wave, B wave. They all fit. The minute is more in line with my thoughts. All right, so let's take a quick look for tomorrow on economic data. Calendar's still a little bit off. Tomorrow we have U.S. trade deficit at 8:30 a.m. Eastern. We have ISM services and job openings at 10 a.m. Eastern. This week it is employment along with so we have ADP employment initial jobs claims on Wednesday. Thursday, the markets are closed on Thursday in observance of President Carter's funeral. So the markets are closed here in the U.S. The equity markets are closed on Thursday, January the 9th. And then we pick up again on Friday with consumer sentiment and U.S. employment. So the non-farm payrolls and all that good stuff. All right. So the next S&P daily update will be on Tuesday, January the 7th.